Hi everyone, this presentation is about the factoring, which is one of the topic under receivable management. So take a look at what is factoring. Factoring is where the company outsources the receivables management function to a factor. Factor is actually a financial institution where the financial institution, it does offer the service to manage the receivables behalf of the company. So the responsibility of a factor include assess the credit worthiness of a new customer before they grant the credits, and to record the sales as well as issue the invoices, send out the statements on a regular basis to remind our receivables that the amount of the outstanding they are supposed to pay and the overdue period. So now the collection of the overdue fees specifically is crucial, as in we know the factor would take responsible to issue the legal letter to recover the overdue fees. So there are two types of factor. One is recourse, the other one is non-recourse. So the difference between the two is between the service fees as well as the bad debts. With recourse basis, the service fees imposed by the factor is going to be lower, because that company were still responsible to absorb the bad debts. Alright, usually after factor, right, the bad debts level it will be lesser, as the factor they are an expert to manage the receivables as compared to our self-managing. So that as compared to the two, we still have the bad debts, but usually the bad debts it will be lesser. For the non-recourse, the factor fees imposed will be higher. In return, factor will absorb all the bad debts. Therefore, that the company will actually transfer all the bad debts risk to the factor. Because of that, the service fees imposed is actually higher. So that it's be careful in the exam that the recourse, non-recourse, so that one will still have the bad debts, the other one that is no more bad debts. So next, benefits to factor. As we know, factor they are an expert to manage the receivables. So that is actually good to outsource your receivables function or department to the expert to manage behalf of you. So the non-recourse factor is actually offers the protection against the bad debts. So that is one of the benefits that we'll be able to get by actually outsource your receivable to the factor. And the factor will actually usually will offer you 80% up to the maximum of 80% of the cash advance on your receivables balances, where the company could utilize the cash they collected in advance to go for a better use. It could be go for the investment purpose to generate even more return. So then, good things about the bad debts is where the business will be able to reduce the administration costs, as I don't need to have a special department to manage the receivables, where I outsource to the expert to do it for me. So these are the benefits of factoring. Alright, so to know more about the calculations, please follow up with the following slides, as in the next presentation I'm going to present it to you on how are we going to make a comparison. If it's without factor, the cost, as well as if you factor, how much is the cost you have to spend. So that we have to make a decision whether is it cost beneficial for us to accept the factor offer. So that I will see you in the next slides.